Thanks for joining me today. My name is Eric Brown with CG Wealth. I'm a portfolio manager at Graham Wealth Partners, and today we're going to be talking about everyone's favorite topic, mutual fund taxation. So if you own mutual funds in your accounts, just as a reminder, in your taxable account, this does not apply for your RSP, your TFSA, your education plan, because they're non-taxable. But if you have mutual funds in your taxable account or your corporate account, then this topic will be of interest to you. Every year, you will get a tax receipt that is sent out to you. You might get multiple tax receipts. And the important part is understanding what it is first, but then also understanding how much tax you're paying and is that a reasonable amount. And so the first thing that we're going to be talking about is a T3 slip. So the T3 is a statement of trust income allocations and designations. A mutual fund typically is a trust, and as a trust, they do have to report tax, but instead of the mutual fund itself paying the tax, they pass that on to investors who are invested in that mutual fund. Typically, at the end of December, most mutual funds will pay a taxable distribution, and that will include things for the portfolio, transactions for the portfolio, or events that happen in the portfolio. And that typically, most common ones are income from interest, maybe you own bonds, or capital gains if a position was sold at a gain, or dividends. And you'll get a taxable event at the end of, or in December, and then you'll get a tax receipt the following year that you will then have to report on your taxes to make sure that you're properly accounting for all the gains that you had in that mutual fund. The second slip that you could potentially receive is a T5, and that is the Statement of Investment Income. That slip is typically used for mutual fund corporations. So there are certain classes of mutual funds that are set up as corporate class, so it is a corporation, which is in contrast to a mutual fund trust. I'd say the vast majority of funds out there are in the trust format, but you do need to make sure that you're aware of if you have a trust or if you have a corporation for your mutual fund. And on the T5, you will again receive information on interest, dividends, and capital gains. The last one that we're going to be talking about is the T5008, which is the Statement of Securities Transactions. And this is the selling of a fund itself. It doesn't include those because that would be reported on the T3 or the T5. But if you actually sold units of the overall mutual fund, either the corporation or the trust, and you had a capital gain, and it would show up on the T5008. So it's important to understand what all those are. Obviously, most people just give it to their accountant, but one thing that is important for you to understand is if you take a look at it, maybe it's comparing it to the previous year. Did you pay more or did you pay less tax? What is the reason for that? And comparing it to other people and what their tax situations are. And I know that might be difficult for the average person. You don't see other people's tax receipts, but that's something that someone like myself can offer as a service, or someone like your accountant. You can check with them to see if it makes sense. And that's something that you do want to evaluate on whether or not you are paying more tax than you need. And no one wants to pay more tax than they need. So if that's something that you want to look at and evaluate, I'm happy to have a conversation with you. So please feel free to click on the button to book a meeting so we can have a discussion about your own personal circumstances and if there's any way that I can help.